Hey everyone, this is Kirk here again at Option Alpha, and it is Tuesday after the close, January 22nd. Just wanted to go over a couple things on charts. I know we're really right in the heart of earnings season right now. I know that the last couple days here this week, we're going to have a lot of earnings come out. So, again, as always, just make sure when you're trading to be aware of when that company has earnings, when they report earnings, if it's in the morning or the afternoon or after the close or whatever. Always a good idea to prevent the gap in earnings that might hit your portfolio. Just have up here really quickly, just as this is something that I got off of FinViz, and I guess what's important about this, and maybe we'll go get more information on it tonight with the president's State of the Union address. But I thought it was pretty interesting that right here in the report, it again the Fed and the Treasury are not hiding that they're going to suggest that the government would rescue banks if one of them threatened the broader financial system. So again, we know for the near future that the Fed and the Treasury have a firm hand in this market. And I've told that to a lot of people I've coached. I don't think the markets are going to fall apart because at any sign of trouble, uh, Tim Geithner and Bernanke are just going to come running in and push this market back up. So, again, I don't think the market's going to rally as it did in 2010, but I think that it's never going to fall apart either. It's going to be a very much a flat to sideways market heading into 2011 for the rest of the year. So, just be wary of that. But as you can see here, they're definitely not hiding anything about their government control of the markets now. So, I guess when the markets and banks fall apart, the government seems to feel like they can just step in and rescue anybody they see fit. As far as some trades go, I wanted to bring to an attention of just one trade that happened on crude oil futures today. These are the February contracts that you see down here below, these 22 days left. And you can see I have positions in these selling options as I usually do across the board here. These are really good trades for someone who has a little bit more sophisticated knowledge of futures and options, etc. But I think that something is really important here. This is one of the biggest trades I've seen in a matter of 45 minutes, really. This trade came in, and you can see it's at the 70 strike puts, so we're in the put column, and there was about 10,000 shares or contracts that got traded in this 45-minute window here. And I thought it was really interesting because one, that's almost $1 million trade, depending on the average price that whoever this is got for it. Two, this is definitely one or two people here that seems to be making this trade. It's not a group of individual traders. You can see throughout the rest of the day, all the different orders, both puts and calls, no one came close to this kind of volume. So it is either a hedge fund or a private equity shop that's doing this trade. Very easy to spot these. The bid ask spread is huge right now. You can see the bid's at 2 pennies and the ask is at 35 cents. So, huge bid ask spread, which you know that means that they're just taking it any chance they can get it. Actually, these options were trading their mark or their average price was right around 2 pennies when it started and got all the way up to around 12 during this rally and this buying attempt that someone came in. So, basically what this means is that somebody's out there hedging a possible move lower in crude oil. And what they're doing is they're buying a lot of puts at 70. Now, this is very far out. The probability of these getting hit is less than 4% here, but they do have a hedge on in case crude oil demand falls down substantially. And what I think is kind of odd with this trade is that it happened in a front month contract, meaning it happened in these February contracts. We didn't see the same type of action in the March contracts, which would suggest that someone's hedging a more long-term drop in crude. But we actually saw it in these front month contracts, which only have 22 days. So for someone to come in here and buy up this many contracts at the price they did, it just kind of gets you thinking a little bit and possibly rethinking what could be happening in the near future. Okay, so on to the charts. Verizon was a big one today with their earnings. Pretty good earnings on their front. I think that the stock could be poised for a move higher. It pulled back a little bit off of the highs today, which is pretty natural sometimes during these high, earnings periods here. But I think what's interesting with Verizon, and I don't usually look at individual stocks, but this kind of perked my attention, is that the last time that we had a MACD bullish cross, where this black line here crosses above the dotted red line right here, actually signaled a pretty good run that Verizon had throughout December. So it ran from about 30 up to around 38. now we have that same type of situation starting to happen, and that same setup starting to present itself on the chart. We have the black line, which is inching closer and could be crossing above this dotted red line here, which could suggest that Verizon could continue this streak up into the 40s. I think that that's a really good trade. It's a really good risk reward trade, but again, keep your stops tight as always. I think the other thing that I wanted to just briefly glance over tonight is just take a look at the VIX real quick. I think the VIX is really setting up for a huge move. One, because I think we're starting to see a little bit more volatility on the upside. We haven't even seen the VIX cross into, God forbid I even say, the 19 range for the last 2 months here. So last time it was at 19 was back in early December. Now it just crossed above there last week and starting to inch up there this week. So I think that the VIX could be telling us that we could have maybe a short-term top in place. You can see that we definitely have what could look like a double bottom on the VIX starting to form very, very slowly. Again, this is very early in the cycle, but not only do we have a double bottom, but we also have this increasing divergence, convergence here on MACD. You can see that the lows or the strength of this particular low, the next low, is a little bit higher. So there's a little bit more rush into the VIX. There's a little bit more fear at this low, even though they're matching. You can see this has strong bullish divergence, which would suggest that the VIX could make a run up and towards the high mid to low high 20s over the next couple weeks. So just something to always keep in the back of your mind. As always, this is Kirk with Option Alpha, and happy trading.